Hello everyone and welcome to today's webinar for Making Tax Digital for Income Tax. Today's session is going to be all about the changes in legislation set out by HMRC on how sole traders and landlords are going to report on their income and expenses. We're here today to support you on that journey, provide guidance based on what HMRC has set out, but in a more simplified way. Today's webinar is more in-depth than top level, but not as detailed as our online course where you can earn a digital badge. And I'm going to talk more about that towards the end of the session. The questions panel will be open today. We have quite a few people on to help us out today. So we have Laura, Matt and Sikanda. So if you can hang fire with your questions till towards the end, just in case it is something that we do cover on the session. But don't worry, if you do ask a question, we do have those guys on hand to answer your questions today. Now, we will not be able to answer every single question that comes through today. So don't worry if you don't get an answer live on today's session. We will reach out to you via email after the webinar has ended. The session is going to last approximately 45 minutes. You will receive a link to the recording of today's session in your follow-up email, and it's around an hour after the session has ended. So don't worry if you don't catch everything first time round, as there is a lot of information to absorb, so you are going to be able to revisit the session at your own pace. One last thing I want to make you aware of is that this is not a product demonstration. This is purely legislation. And there is HMRC beta in place at the moment, and specifically for our Sage Accounting product. But I will explain that how to register for that beta towards the end of the session. So my name is Abby. I'm a learning facilitator here at Sage. I've been here nearly 5 years. So I'm going to be taking you through the Making Tax Digital for Income Tax and what it could mean for you. Just a little bit of housekeeping before we get into the topic. So some of you may be new to the webinars, some of you may be familiar, but I'll go through the process just in case. When you join, you will be placed on mute automatically. If you want to ask any questions, you just use that little icon that it looks like a little speech bubble with a question mark in the middle. And that will open up the questions panel, and then you can send your questions across to us. There is also a handout available for today as well. To download this, you just click on the little icon that looks like a little document with a folded corner. We always recommend to download these handouts during the session, as it will have some useful links to our help centre, to some videos, HMRC guidance as well. Now, we always recommend as well, download these handouts on the session, as they won't be available after the session has ended. Please note this session again is recorded and it will be included in your follow-up email, which you will receive around an hour after the session has ended. Okay, so this is what we're going to be covering on today's webinar. So we're going to start by introducing Making Tax Digital, what it is and when it was first introduced. Then we'll look at who will be impacted and when, and the different thresholds. What are the requirements? So we've broken it down into 3 sections, so recording, submitting, and your submitting your quarterly reports and your final adjustments and your tax return. We'll delve into the digital records and the quarterly reports and what you can expect to provide to HMRC. We'll look at key dates for submissions and deadlines as well. And then lastly, we'll look at ways and means and how you can plan and prepare and what actions you may need to take. We'll also cover some frequently asked questions or important questions. And then at the end, if we're going to pick up any questions, we'll do at that point. So what is Making Tax Digital for Income Tax? Well, firstly, Making Tax Digital was first introduced in 2019 for VAT. But it's 7 years later, in April 26, when arguably one of the biggest changes is set to arrive. Making tax digital, also known as MTD, for income tax will affect millions of sole traders and landlords. Now, it's going to be introduced in stages, and we'll come on to that in just a moment, but you may have more time than you think. However, we are encouraging you to prepare now, so when the time comes, you have already got your ducks in a row. So, who and when? So the criteria for MTD for income tax is sole traders and landlords with UK and or foreign property, and also shared ownership properties. If you are a sole trader with multiple businesses, then it will be the combined income of those businesses that will determine if you cross the threshold. Now, you could be both a sole trader and a landlord, so therefore it is combined income before expenses. A key point to note here is that if you have income from a jointly owned property, it is just your share of the property income that will count towards your qualifying income. So phase 1, which is April 26, is based off those earning over 50,000 a year. Phase 2 is income over 30,000, and phase 3 is over 20,000. So as I've just mentioned there, you might be wondering, when is this all going to be happening? So 50,000 will need to comply by the 6th of April 2026. Over 30,000 will be the 6th of April 2027. And over 20,000 will be the 6th of April 2028. The scope of who is impacted by this legislation has changed slightly, and HMRC have decided income from partnerships no longer count towards qualifying income. Okay, so just a little recap of who and when. So it is combined turnover before expenses. It's for self-employment and property, as I mentioned, UK and foreign property. And qualifying income is assessed 2 tax years before the tax year in question. So for example, if you qualify for phase 1 in April 2026, you will be reporting on the tax year 24-25. Let's take a look at some scenarios based on some incomes. And we're going to base these scenarios on phase 1, which is where you earn over 50,000. I'm going to pop each scenario on your screen. That's a little quiz. Like I said, there's no right or wrong answer. Well, there is a right or wrong answer, sorry, but there's no pressure to get these answers right. It's just a test where people's knowledges already are at the moment. So the first one I'm going to test is Jenny is a sole trader and has a self-employment income of 25,000. Will Jenny need to comply by April 2026? So a simple yes or no answer. Pop your answers in there for me. We usually wait until we get around 70-75%. Don't worry if you don't know the answer. Just pop a guess in there, and then we'll share results with you. So you can see the votes coming in there nice and quickly. Okay, so we've got around 75%, so don't worry if you haven't voted. So what I'll do is I'll close that poll down and I'll share those results with you as well. Okay, so 4% of you have said yes, and 96% of you have said no. So the answer is no, Jenny will not need to comply by April 2026 as her income is below 50,000. So we'll do scenario 2. So we'll just hide that one down. And we'll do the next one. So the next scenario is Jenny is a sole trader, has self-employment income of 25,000 and rental income from property of 14,000, so that's rental income. So will Jenny need to comply by April 2026 with this combined income? So again, exactly the same as you did before, yes or no. So you can see the votes are coming in now. So again, we usually wait until we get around 70, 75%. So I can see that coming in now. So what I'll do is I'll close the poll down and we'll share the results with you again. So as you can see, 5% of you have said yes, Jenny will need to comply by April 26, and 95% have said no. So the answer to that one is no. So that the combined income of 25 and 14 means that she's got a combined income of 39. So she won't need to comply by April 2026, but she will need to comply by April 2027. Okay, so we'll just do the last scenario. So I'll close that one down and we'll do the last one. Okay, so this time Jenny has a self-employment income of 25,000, a rental income from her solely owned property of 14,000, and she also has her half of shared ownership of rental income from a property she shares with her sister. So will she need to comply by April 2026? So I can see those votes are coming in already. And don't worry, this is the last test I will be doing today. So you can get your votes in for me. You can see we've already got them coming in. Again, I'm going to wait until we get around 70, 75. Okay, so we've got the answers there. So I'm just going to close that poll down. Again, don't worry if you haven't voted. Just a little bit of fun. Okay, so 79% of you have said yes, Jenny will need to comply by April 2026, and 21% of you have said no. So the answer is yes, Jenny at this point will need to comply by April 2026 because she's got that combined income of 25k plus the 14 and then plus the 13, which is her half of the rental income. That takes her income to 52,000, so she will need to comply by April 2026. And I'll just hide this down there. And like I say, part of your handout there, you will have these scenarios as well. So you can read them back in your own time and go through them and just to get a better understanding at which point you may need to comply. Okay, so we'll move on to the next section, which is what are the requirements. So what we've done, or what rather HMRC have done, is we've kind of got it down into three sections. So you've got it as recording, submitting your quarterly updates, and then your final tax return. So, as I've mentioned earlier, you can break it down into these three sections. Makes it a little easier to digest as well. So firstly, we have recording your income and expenses. If you are already using software, you may already be doing these steps. So in that case, nothing is changing. You just keep recording your transactions, but you just need to make sure that you are recording your transactions for each business and or each property that you own. Secondly, the quarterly updates. So these updates are just going to be the totals for each category, which if you have entered into the transactions in the software already, they will be calculated and added together for you. So you're not actually sending HMRC transactional data. Lastly, we've got the final adjustments and corrections and submitting your tax return. Now, although you can make adjustments throughout the year, you may need to check if any final adjustments, or you may need to claim any relief. This can be done at this point. Once all the checks have been done, you then submit a final tax return confirming everything that has been submitted. Everything that you've submitted is to the best of your knowledge. So what we'll do now is we'll actually delve more into the digital records and the quarterly updates. So when it comes to processing in the software, you must enter all income and expenses. If you are a sole trader and a landlord, you must keep your property digital records separate from your business records. So when entering transactions, you must include the amount, the date, and the category. Now these categories are defined by HMRC, so it'll be the likes of turnover, cost of goods bought for resale, wages, salaries and other staff costs, car, van and travel expenses. So you might be wondering as well, what am I expected to record? So for your self-employment, it will be the likes of including sales, takings, fees, costs of stock, travel, office, and other financial costs. If you own property, independently or shared, you will be looking at recording rent, lease fees, reverse premiums and inducements, cost of repairs, maintenance, and potentially other services. You may find that you're actually already recording all of this information, so this part of the process may be no different for you. Additionally, you can automate some of your processing using something called bank feeds, which does exist in our products already, such as Sage Accounting and Sage 50 Accounts, and it may be something that you may be aware of. You can use bank feeds rules to automate your transactions as when they come in from the bank, so they can be posted into your software automatically. Okay, for the quarterly updates, the quarterly updates are a simple summary of income and expenses. It's going to support you and HMRC in understanding your tax and national insurance liability across the year. So what must be in a quarterly update? So income and expenses, and it's the category totals for that period. So you're not actually going to be sending HMRC transactional data. This is the same information that would be provided in the existing self-assessment tax return, but it's now provided quarterly. Now, don't worry if your data is not completely accurate within these stages, because you can always adjust in the next quarter as the periods are cumulative. You just need to make sure at the final stage of submitting your tax return, it is as accurate to the best of your knowledge. Okay, so let's have a look at submissions and deadlines. So the update periods for the quarterlies are by default aligned to the tax year. So for example, the first quarterly update period is the 6th of April to the 5th of July. This is known as standard update periods. If your business has an accounting period aligned with to the 31st of March, you will be able to report based on calendar update periods. All other businesses should use the standard periods. And then lastly, before point 3, sorry. So the submission deadline is of the following month. So 1 month and 2 days after the end of the standard update period. The calendar quarters will also follow the same rule, 1 month and 2 days after the end of the period. Just got a quick question there from Ian. I just want to pick that up just to clarify. So these periods are going to be starting from April next year. Unless you join in the beta, you may follow some dates, but at this point, these are for starting in April 2026. And then lastly, moving on to the final tax return is when you're going to submit and pay. And the deadline is the same as self-assessment submission, so the 31st of January following the tax year. So that means if you are following the standard update period, it gives you from April till the following January to make any final adjustments and claim any applicable relief. So let's take a look at the whole picture from start to finish. So here we have the taxpayer. Let's call him Joe Bloggs. Joe Bloggs has 2 businesses, 1 UK property solely owned that he rents out, and then a property he has shared ownership with his brother, where he also has rental income. He adheres to the standard periods, so aligned with the tax year. He will digitally record income and expenses for each business that he owns, and he will also have digital records for his property that he rents out. He will then submit quarterly reports for each one. Now, one thing to note is that if you have multiple properties, you'll only submit one set of quarterly reports for all properties you own, so the values are combined. Once all quarterly updates have been submitted, you will then enter the end of year process, where you will make any final adjustments and allowances. So this could be interest or dividend income, a capital gain or claim of marriage allowance. Essentially anything that's on your tax return now that sits outside of the self-employment and property pages. Now I just want to remind you, all of these adjustments can be done throughout the year. You do not have to wait until the end to make any of these adjustments. And then finally, you will submit your tax return, your final tax return, by the 31st of January the following year. All you're doing at this point is just confirming that all the information you have already sent over to HMRC is correct and accurate to the best of your knowledge, meaning HMRC can give you a more accurate tax estimation of your liability. If you miss any of the above deadlines, penalty points will apply. Under the new penalty regime, you will accrue points for late submissions and late payments, and these will translate to monetary fines once a certain number of points have been accrued. So hopefully this gives you more clarity on what you can expect from making tax digital for income tax. If you are already entering your digital records, then you're already halfway there. It's the in-year process that has changed, but again, all the software is doing is taking your category totals based on what you have entered into the software. And that's what needs to be sent quarterly, and your tax return is just clarifying, the tax return at the end is just clarifying what you have already sent. It's just spreading out the workload rather than having to do it all in one go in the January. Okay, so let's take a look at planning, preparations and actions. So another key part of MTD for income tax is that taxpayers may want to hire multiple agents. And that's they might want to need support with the work involved. So you want to take your time to consider whether you want to engage with an agent, bookkeeper, or an accountant. If you don't have one already, for example, you might not understand, might not be aware of what you might need. So might want to use a bookkeeper, sorry, for their quarterly reports. You might want to use a separate accountant for the end of year tax return. And then landlords may have a specialised agent for their property business and a different agent for the remainder of their submissions. So that's just another thing to consider. Like I say, you will find plenty of information online, and your handout has plenty of guidance on that as well. Okay, so moving on to the things that you need to be considering and planning ahead of time. So the first one is eligibility. So you need to determine if you need to use MTD for income tax. Understand your income for the required periods to understand if you are over the income threshold and whether you will need to comply with MTD next year or the year after that. Or if you're close to the threshold, in case you need to monitor this closely for when you do cross the threshold. Next, we've got digital record keeping. So ensure you have a system in place to keep digital records of your business, income and expenses. This involves using compatible software to create and maintain these records and submit your information to HMRC. Next, we have plan and manage your time. So you want to plan your time effectively to ensure that you are ready to get your quarterly updates submitted on time and avoid any penalties. Next, we have software. So you want to choose MTD compatible software that suits your business needs. Many software providers offer solutions that can help you and comply with the new requirements. As I've mentioned just before, so the multiple agents, so now that you understand what your obligations are, or you will understand what your obligations are for MTD and the work involved, take time to consider whether you want to engage with an agent, bookkeeper or accountant if you don't have one already. So for example, you may be comfortable doing the day-to-day recording of money in and money out yourself and using the software, but you feel that you may need that extra support with the quarterly updates and the end of year task as well. Next, you might want to consider training for yourself or your staff to ensure everyone is familiar with the new digital process and how to use any new software that you may acquire. Next, we have the voluntary sign up. So you can sign up for the MTD income tax beta before it becomes mandatory. This can help you get accustomed to the new system and iron out any issues early. Now, the public beta I'm going to talk about in a moment, and I'm going to tell you all about it and then how you can get registered for it as well. Lastly, stay informed. You want to keep up to date with any further announcements or changes to the MTD for income tax requirements. The government may provide additional guidance as the implementation date approaches. Again, we're going to provide further support and useful links to keep you up to date. I can see a couple of questions coming in there, already about software and things like that. So you may already use one of our products, or you may be here to find a solution. So what we can offer is we offer software to keep you compliant. You can process on the go with our Sage Accounting product. With our products, you can capture receipts and invoices, automate your processing. You can track invoices, You can forecast cash flow. You can run management reports and see how your business is performing. Very key one, personal to me, is we offer free training and support. Just like today's session, we also offer free courses on Sage University. And lastly, we offer world-class technical support. We do have MTD for MTD for Income Tax Hub if you wish to check it out. On your handout, if you click that Find Out More, it will give you all the information. Before we move on, I will quickly show you this this hub. So I'll just quickly click on this one. I'll show you what this looks like. So this is our Making Tax Digital hub. So it gives you all the information. You can set up reminders towards the countdown. You can join the countdown with us today. You can check all the dates. All the information we've covered today is included on this hub, but it will also provide you with some timelines, but also as well, there is some software solutions there if you don't already have a solution in place. Now, at the moment, HMRC have a public beta running, and I'm going to go into more detail in just a moment. That beta is taking place on our Sage accounting product, which is still in development as we work with participants to make the MTD for income tax journey as smooth as possible. Other products like Sage 50 accounts will be ready in time for the launch of phase 1 in April 2026. So just keep an eye out for any communication if it's Sage 50 accounts that you use. Okay, so who can join the public beta? So this beta began in April this year, but you are able to still join the beta at any point during the tax year. Just because April has passed doesn't mean that you can't participate. However, joining the beta, it will mean that you will have to submit quarterly update information retrospectively. You are free to leave the beta at any point, and you can decide that you want to revert to the old self-assessment process after the tax year, then you can. However, HMRC wouldn't necessarily encourage this, but the option is there. If you join the beta, you will be subject to the new MTD for income tax penalty regime as opposed to the existing penalty regime. Under the new penalty regime, you will accrue points for late submissions and late payments, and these will translate into monetary fines once a certain number of points have accrued. However, HMRC have confirmed that you will not get any late submission penalty points for missing quarterly updates during the testing phase. I want to make that very clear, the testing phase. If you join the beta, you will have access to HMRC's dedicated customer support for MTD, to ensure a successful transition to the MTD for income tax. The team can also support you and your agent with some of your wider personal tax affairs, including individual PAYE and self-assessment matters. For participating agents, this will extended support will be available for all your clients in the MTD beta. In order to join the beta, you must sign up to MTD and have the software that is MTD compatible. The MTD sign-up process is done by the government website and can be done by the taxpayer or the agent, but the agent must have an agent services account. So what I'm going to do now is I'm going to show you, some of the criteria. Now, I'm not going to spend the rest of the session going through the criteria, so I will leave you to do that in your own time. Again, make sure that you download the handout so you have access to this. Alternatively, you will find all of this information on the Help Centre. I will say that there is some must-haves, some things that you must have to be able to take part of the beta. You can have certain things, and there is some things that you can't have. So make sure that you're checking this list to make sure that you do qualify. And I have provided a guide in the bottom left. So volunteer for the beta, that's our guide. That's going to take you to how to register via the government website, and then what to do with your Sage accounts, Sage accounting software once you have registered. Again, just a reminder, the beta is on the Sage accounting product. So that's our cloud-based product. Additionally, as well, if you are an agent or an accountant, I've also provided a video for you to watch to get your clients registered for the HMRC beta. So if you want to click on that link, that little one on the right, that's going to take you to the video where you can watch a step-by-step guide. Okay, so some important questions answered. So these are frequently asked questions, and I can see that some of the questions have already come through to us today. So the first question is, can I just carry on using spreadsheets? The only way you can carry on using spreadsheets is if they link to compatible bridging software that can submit your figures to HMRC digitally. Manual entry and copying and pasting will not be allowed. Next question, will I need to pay every quarter? So this is one of the biggest myths about MTD, that sole traders need to do 4 year ends in a year and also have to pay 4 times. But this is not the case. When you pay, remains the same as the existing system. So it'll be the 31st of January the following year. Does HMRC want to see all of my accounting data? No. MTD doesn't require you to submit more data, but it does change how often you report it. Instead of a single annual return, you now need to send quarterly updates. With Making Tax Digital, will I pay more tax? HMRC state that Making Tax Digital is to close the tax gap, the avoidable errors and the fraud. If you've been completing your tax returns correctly, then Making Tax Digital shouldn't mean you pay any more or less tax. Okay, so coming towards the end, so I'm going to summarise what we have covered so far. So the first phase begins in April 2026 for those earning over 50,000. This process is for sole traders and landlords. Income is assessed 2 tax years before the tax year in question. Transactions will be recorded digitally and submitted, and the categories will be submitted via compatible software. You will submit 4 quarterly updates and a final tax return. Adjustments can be made throughout the year or at year end. Landlords need 1 report per quarter, no matter how many properties that they own. You can register for the beta ahead of mandation in April 2026. I have provided some links down the right-hand side for further information. So we've got the MTD for Income Tax Hub, which I've already shown you. We've got the HMRC guidance. And then also as well, we have 2 videos on myth busting this topic. So we've got part 1 and part 2. So these are videos where me and Duncan tackle some of the most common MTD for income tax myths. Part 1 and part 2. So they're only about a couple of minutes long, so definitely worth checking those out. Okay, so I can see we've still got some questions outstanding there. Again, just a reminder, we may not be able to answer all of your questions today, as it has been a very, very busy session, as you can imagine. But I just want to cover this. So as I've mentioned at the start of this webinar, you know, we've tried to keep it in depth, but not too in depth, you know, quite top level, although it might not feel like it. But what we do have is we do have an in-depth course on our Sage University website, and it's completely free. You can complete this at your own leisure. It's interactive, and you can also earn a digital badge by completing the course as well. So you can share this on your email signature, on your social media like LinkedIn, share it with your colleagues. If you want to get registered, on your handout, you can click the link to here to get started. So again, don't forget, it's completely free. Okay, so as I've mentioned, pop your questions across at this point now. Again, we're not going to be able to get them all answered by the end of the session. We'll try our best to get back to all of you via email, but again, there's plenty of guidance on your handout and on our hub and also the HMRC website as well. Okay, so that does bring us to the end of today's session. If you've got what you need today and you want to leave the session, you will receive an email in around an hour or so with links to both our webinar schedule and today's recorded session for you to refer back to if needs be, as I can totally understand that, you know, a lot of information has been discussed today and you might find it a little bit overwhelming, so you can rewatch that recording. So that recording as well, that email, you're going to receive that around an hour after the email is going to come out to you about an hour after the session has ended, so keep an eye out for that as well. Upon exiting the session, you will see a survey today at the end. If you could please let us know any feedback regarding the webinar. So how I did today, what you would like to have seen, what could I have done better. Just remember, today's session is our first webinar on this topic, and it's all about breaking down the guidance set out by HMRC. So just whether you leave a short comment or a long comment, I do like to read every single comment on there. So if you could spare a quick moment to do that for me. Okay, so what I am going to do at this point is I am going to wrap up this session. Again, don't worry if your question hasn't been answered live on the session. We will try and pick up as many as we can after the session has ended. I want to say thank you to my colleagues who have been on hand today to answer your questions, but also as well, thank you to you all for your participation and your patience. Just a reminder, we've got plenty of sessions over the next couple of weeks, so don't be shy and get registered. So I want to say another thank you and take care.